think if people start viewing it more as savings rather than an investment, it changes the whole financial picture, because then you're thinking, okay, how much savings do I want to have versus how much do I actually want to have allocated to risk investments? Right now, we're all forced to buy risk investments, or not really, right? Because there's Bitcoin, but like the way that we were viewing it prior to Bitcoin is that we're all forced to go beyond our risk tolerance because we have to beat inflation. There's no way out. You can't just hold cash in a mattress the way you maybe could 100 years ago and expect there to be staying power. At a minimum, right? Like the government is targeting 2% inflation, in which case you have to do something. And so for most people, like they're using the S&P 500 basically as a savings account, right? And it's totally inappropriate because you can't use a company, a bunch of businesses as a savings account, right? You need actual savings. And actual savings is what's going to help you in situations like, in 2020 with the whole COVID scare, right? There was a complete removal of liquidity from the system. And it's because people are living paycheck to paycheck and they're putting their savings into S&P 500 because they don't have anywhere else to put it. And so then people have to sell the S&P 500 to go put food on their table. It doesn't make any sense, right? Like people need to have cash around. And governments around the world have undervalued savings, I would say, and that's making a comeback. I try not to actually have any kind of price expectation because, right, again, like it's long-term savings. And so in the future, it'll be worth more than it is today.
If you enjoy this podcast and you want to learn more about Bitcoin, then make sure to subscribe to our free newsletter. Every Friday, we send out insights into macro, Bitcoin on-chain, and Bitcoin mining. Join over 100,000 existing subscribers by clicking the link in the description or going to newsletter.blockwareintelligence.com. This video is sponsored by Stampseed. You plan on holding your Bitcoin for decades, so you need to make sure that your seed phrase is documented in something that can last just as long. Stampseed's signature titanium plates and stamping kits do just that. If you simply write your Bitcoin seed phrase down on a piece of paper, it's vulnerable to fire, water, and all sorts of erosion that can happen over time. Make sure you keep it secure for years to come. Head to stampseed.com and use the code Blockware15 for 15% off the entire website. You wouldn't walk down the street with a giant sign that has your home address on it. So why would you do the same on the internet? You need to use a VPN. OrcaVPN is a service that encrypts your internet connection and hides your IP address, ensuring your online activities are private and secure. OrcaVPN works on all different devices: Windows, Mac, iOS, Android, and Linux. Head to OrcaVPN.co and use the code Blockware, and you can access OrcaVPN for just $1.99 a month. For less than the price of a cup of coffee, you can ensure that all your internet activity is private and secure. Again, that's OrcaVPN.co, OrcaVPN.co. Hello, everyone. Welcome back to the Blockware podcast. I'm proud to welcome Morgen Rochard, and you guys may know her as the wife of Pierre Rochard, but she's got a storied career in finance. So, Morgen, why don't we start with you going through your background and, how did you get to where you are today? What was your childhood like growing up, and how did you end up in the finance path?
Yeah, thanks so much for having me on. So I have owned my own firm now. I'm a registered investment advisor located in Texas. My firm is almost 10 years old, which is kind of crazy. And I started my career actually as an equity options trader a long time ago, over 15 years ago now. And the stress of that actually, it wore on me quite a bit. I think I'm more of like a slow pace type of a person rather than, like the rush of emotions and trading and everything else. It was a little high paced for me for sure. And so I found my way into wealth management, and from there decided to start my own firm. And so, yeah, I've now had a pretty long career in finance, and along the way found Bitcoin, and have incorporated that into my practice in the last, I started advising on Bitcoin now in 2016. So it's been quite a while doing that as well, but my views and how we incorporate that into client portfolios has certainly changed over time and evolved to be where it is today. And thank God I have like a booming practice now, mostly Bitcoiners basically coming through who need financial planning. And so I finally feel like after 10 years of running my practice that I like truly have the ideal client base, and we're getting exactly who we want.
That's awesome. So it's not you having to orange pill people. It's people that are already orange pilled basically coming to you for more financial advice.
Yep, exactly. So the original group of people that I had in my practice, I definitely sat down with and spent time explaining Bitcoin and spending time orange pilling for sure. But the people who have been coming in the last 3 years now are already orange pilled, and they're just looking for financial planning advice. And what I found really interesting about that is that everyone has said to me, "Oh, Bitcoin's going to make your job obsolete. No one's going to need a financial planner anymore. Bitcoin is the financial plan." And for a lot of people, that's true. But there's always going to be a group of people that benefit from, let's say, having a personal trainer rather than doing it on their own, right? All of the things, all of the financial planning tools, so to speak, are out there for people, but applying it to your specific financial situation is always difficult. And so it's hard to know without the experience and the wherewithal and, hearing from people who've already done it, what it is that you're specifically supposed to be doing for your situation, especially as, stacks grow and, financial problems become more complicated, right? As we gain more wealth, and so taking advantage of tax laws and all sorts of other things like that, people are wanting to do that, and they're wanting to, even though we all think maybe in the future that Bitcoin's going to moon and there'll be no more government, and on and on and on, right? The typical tropes that you hear in the Bitcoin community. Unfortunately, we live in a current reality where the IRS is still here, right, and the U.S. government still
Yeah.
exists, or maybe fortunately, it depends who you're talking to, and so from that perspective, right, we need to apply what's going on currently to our finances, right? And there are a lot of things that Bitcoiners can take advantage of.
Yeah, with the comments like that, I could definitely tell you're Pierre's wife. And you know what they say is mo money, mo problems, right? So it makes sense, as we sort of go through this transition period to, yeah, theoretically on a complete Bitcoin standard, you could just save away in Bitcoin. You wouldn't need any help, but there's going to be a lot of transition to get there. Dave Ramsey has his like baby steps and his philosophy. If you had to boil down personal finance to your own personal philosophy, what would that be?
Yeah, it's spend less than you make and save the rest, and spend on what you love and sacrifice on the things that don't particularly matter, and that's how you build wealth.
I like that. That's a lot of people, they struggle with the first step of spending less than you make. That's something that Bitcoin opened my eyes to. I was a broke college student at the time when I found it, but I was just spending everything that I made with no concept of long-term savings. And then Bitcoin allowed me to shift my mindset to being a net producer instead of just a net consumer. As a financial advisor, are there certain handcuffs that they put on you when it comes to talking about Bitcoin?
So the SEC hasn't been super clear about what we can and can't do. And so I like to think of Bitcoin as kind of like we advise on clients about housing all the time. So a house isn't a security, right? But a client does come to a financial planning practice and say, how much house can I afford, right? That's a very common question that any planner would get. And no government official would ever say, you can't tell a client how much house they can afford, right? Bitcoin is, as far as the SEC is concerned, a commodity. It's a savings vehicle. It's a savings technology that we like to use. In which case, there's no guidance. There shouldn't really be any guidance from the SEC on how much Bitcoin a client should or should not own. How much savings a person has is up to a person about how much savings they think they need, they want to have, they find comfortable, and so forth. I think the issue really is the crux of it, right, is around the volatility of it. And so, like, why they want to protect consumers is because they don't want consumers to buy at, let's say, 70K and then have it go all the way down to 16K, right? They lose all their money, they lose their shirt, and that kind of a thing. And they are always trying to put in these protections to help consumers in that regard. But really, what ends up happening, right, is sometimes the protections work and a lot of the times the protections don't work, right? And so in this case, though, they've given kind of no guidance, I think, other than saying that Bitcoin's not a security, and all of these other cryptocurrencies out there, they might be. We're not sure whether or not they are, but if they are, they're unregistered. In which case, in our practice, right? So it's me. There's another planner in my practice, and then we have support staff. And so, like, our take on it is basically that Bitcoin is not a security. We can advise upon it the same way we would advise upon buying a home or something else like that. We don't advise upon all of these things that may or may not be unregistered securities. We weren't going to do that anyways. I'd never tell somebody to go buy Ethereum or something like that,
Yeah.
right? So it makes it really easy, in fact, to be like, hey, like, you can't own that because we don't really know what that is yet. Kind of
Yeah.
blame the government. You can't buy that because the government says they're not sure about that. And then, there's obviously a whole list of other reasons why you wouldn't want to buy that. And so, yeah, from that perspective, I don't really think that we're handcuffed from a regulatory perspective to advise upon Bitcoin. That is yet to be seen, though, right? So while they don't have guidance about it now, they might have guidance about it in the future. And I think, especially with this ETF coming on board, right, the ETF itself is actually going to be a security, in which case the SEC is going to obviously have reign over that. And so advisors putting their clients in the Bitcoin ETF, right, that is going to have come with all sorts of regulatory issues. Whereas advisors like me who are like, hey, get a multi-sig set up and go buy a Bitcoin for yourself and go put it on your multi-sig, right? That's not part of their purview because it's a commodity as far as they're concerned.
Yeah. Is that the ETF something that you're having conversations with your clients about? And do a lot of them actually do their own multi-sig, even, regardless of age, right? I imagine you have clients, maybe closer to like millennial age and then all the way up to baby boomers, or even, the baby boomers doing collaborative multi-sig.
Yeah, so for the most part, nearly everybody in my practice has either single sig or multi sig. We have a couple of clients who were never able to get on board. They have no Bitcoin. We have a very small handful of clients who still own GBTC. I probably would not sell their GBTC to buy the ETF at this point. It seems like GBTC is going to convert, in which case they'll benefit from the discount closing. And also, like, we do have capital gains, right? You have to kind of weigh up whether or not you want to take capital gains to go into a different vehicle, in which case this isn't going to make sense, I don't think. But for the vast majority of my practice, everyone is doing single or multi sig, and I would say of the people doing single and multi sig, mostly it's multi sig at this point because it makes sense to have multi sig for most people. For some people, single sig's fine, and that's great as long as you're storing it properly. You've got a steel seed plate doing the whole thing, right? Then you're fine. For most people, right, some that's a little intimidating. Oh, what if I lose, everything? And then all my
Yeah.
Bitcoin's gone, right? In which case we do like to do collaborative custody. We do use Unchained Capital for that quite a bit. There are other options obviously out there. A lot of our clients do have an Unchained setup. And so I do think it makes sense, though, for people to hold their own keys. And the ETF, I don't think, is going to affect our business at all, especially at this point. Now that we have people who are Bitcoiners coming through, there's really no point of selling somebody on an ETF when the right way for them to hold it is the way they want to hold it, right? It's the other way around, that we're going to be selling people again, like selling people on actually buying outright Bitcoin rather than buying the ETF, because that's the right thing to do. And so for me, the ETF, I think, it'd be more of like a gateway. The same way we use GBTC. When we couldn't get clients to buy Bitcoin, we had them buy GBTC because it was more comfortable, with the hopes that they would see it and then they would start asking questions about it, and then they would eventually want to own Bitcoin outright and have the right setup. And we've actually seen for most people that that's been true. So most people in my practice who were not Bitcoiners who came in started with GBTC and ended up in multisig.
Right. I kind of view the ETF the same way. It's a Trojan horse for number go up, and number go up is the most potent orange pill there is. When people see Bitcoin ripping, then they actually want to learn about it. How do you think the non-orange pilled financial advisors will approach the ETF? Do you expect the grayscale one to be the dominant vehicle there, or do you expect sort of competition among the various ETFs? Maybe some of them will want to publish their addresses on their on-chain addresses to be really transparent. Maybe they'll offer redemption, where you could take, if you have the shares, actually take custody of the Bitcoin. How do you view that sort of shaking out?
Yeah, it's a great question. I would say so from advisors that I've talked to who have already allocated to Bitcoin, who are not doing it the way that I have, they've actually used the futures ETF, which I think is a complete mistake. And so they're just using whatever's out there and whatever's available to them. And using an ETF to them is better than, let's say, holding something like GBTC, because there's a lot of complication around GBTC the way that it is right now. If it converts to an ETF, then I think that it may not be the dominant one, but it, depending on when it converts, but it will have dominance, right? Because it's been around for so long, and there are a lot of people who are just waiting for this thing to happen who are not selling, basically. So in that regard, like, they're going to maintain their asset base because of that, I think. Whether or not they get a lot of new people, I think, depends on when they convert. First to market power has a lot of power. So whoever gets there first is probably going, even if it's, a day before somebody else, people are going to start piling in on day one. And so I think that, right, that's why there's like so much talk about, oh, BlackRock now put out, their filings and so forth. Like, is the SEC going to, approve theirs first before everybody else? And so unfortunately, like, I think that that's the way that it goes. I think that the average advisor probably isn't going to dig into all the details on what the ETF itself is specifically offering. They're probably just going to put their client in whatever gets approved first. From there, though, I think once they're in, right, they might then do some research, get some sales calls, hear about the different things, right? Some advisors are going to wait. They're not going to immediately pile into it, in which case, I think that the ones that are going to offer the most optionality about people actually withdrawing Bitcoin are going to do the best.
Yeah, I tend to agree. Do you expect one to get approved before everyone else, or do you think it'll happen all at once?
I wish I had a crystal ball on that. Knowing the SEC, I'm sure they'll pick somebody first.
Yeah,
I
that
don't
that
know
makes
who that
sense.
would be though.
If I was a betting man, I guess I would say BlackRock just
Yeah,
because
I
they're
would I probably assume it would be BlackRock, but yeah.
Yeah. What do you think about this FASB rule change? Is that an actually major bullish catalyst? It's supposed to come into effect actually a year from today, December 15th, 2024. Can you explain, what actually the rule change is and why this could be bullish?
You actually might know more about the rule change than me. I hadn't read up on the FASB rule change.
Okay, yeah. So basically, as far as I understand, with the current way they have to market on their balance sheets, it's like whatever the lowest trading price Bitcoin reached since you acquired the asset. So if it's like you bought Bitcoin at 60,000, you have to market at 16,000, the bear market bottom, instead of whatever it is now at 43,000.
Oh, okay. Sorry. Yeah, I do know what you're talking about. I think that for the average investor who is going on yahoo.com and looking at, earnings per share and using that to make decisions, then yeah, it's going to affect how they view companies that hold Bitcoin on their balance sheets. For the savvy investor, it really doesn't matter at all. They make all of these adjustments in their models, in which case it's kind of irrelevant. It's just an annoying accounting tool, I would say. Just kind of like we were talking about earlier about how the government tries to get involved to help consumers and do all these things, right? They're trying to protect consumers by saying, hey, you got to mark to market this volatile asset on your balance sheet so that people are aware. But really what's happening is that like the more savvy investors are going to be able to navigate around that better than the average consumer, unfortunately.
Yeah, that makes sense. The guys with the capital, they already understand that Bitcoin. No, it's not 16,000, even though it may look that way if you're just looking at Yahoo Finance. Yeah, so
Yep, exactly. And same thing the other way, right? If something gets marked to 70K, let's say, because that's where Bitcoin goes, and then Bitcoin drops to 30K, right? They're not going to use 70K in their models. They're going to adjust downward too.
right. So maybe this is just blowing smoke. So it's not actually as bullish as we might think, but there are a lot of bullish catalysts on the horizon, definitely with the ETF and the halving. I want to switch gears a little bit more towards personal finance because these are conversations I have a lot with people my age. Do you What do you think about younger people and traditional like retirement vehicles, IRAs, 401ks? Would that make sense for someone my age, or would you, not financial advice, sort of suggest that just keep all your savings in cold storage Bitcoin outside of the system and outside of those vehicles?
So people hate when I answer these questions because it always depends on a person's specific situation. So I'll start with this. Let's say you're a young person and you went to college and you racked up quite a bit of debt in school because a lot of people are doing that. And then they go out and they get a job, right? And their job is, it's good enough, right? We're not talking about somebody who gets, a ridiculous degree and is in massive amount of debt. We're talking just like the average person who gets like a reasonable degree, gets a reasonable job, that kind of a thing. But they still have quite a bit of debt that they have to pay off. And so for that person, right, they're going to want to be putting at least 10% of their income towards paying down that debt. And so I would say that like you have to kind of assess your situation, right? If you're a young person with debt, right, you need to be putting money towards that debt because even though, right, you can have all these expectations for Bitcoin that it would work out better if you bought Bitcoin, right, and Bitcoin went to the moon, and then you just take the moon money and you put it towards your debt, right? It would work out better. The problem is that you don't know when that's going to happen. And most of the loan terms on, let's say, student loan debt is something like 10 years. For some people, right, they get into these income-based repayment programs. We can spend hours talking about them, so I'm not going to bore your audience about stuff like that. But if you're in one of those kind of programs, again, what that means, though, is that your income is so low that you can't afford to actually make your student loan payment, in which case it's even less of a chance for you to own a lot of Bitcoin. You can get into a situation where you might want to like buy some Bitcoin to hedge your tax bill. There are other reasons why you would want to do that. If that's your situation, I would highly recommend talking to a planner who knows what
Yeah.
they're doing so that you can arrange this properly. But just throwing caution to the wind and saying, well, I'm a young person, I'm going to get out of it, whatever, I'll just buy Bitcoin instead of taking care of the rest of my situation, then I would say that that's not the right path to go down. And the right path to go down is really to evaluate where you stand. If you don't have a lot of debt, right, you didn't come out with a lot of student loan debt, or you already paid off your debt, but you're still young, and your company offers a matching program, that's 100% return. Basically, if you put 1% in and they match that 1%, right? One for one, you've got 100% return. So yes, you're going to be invested in, let's say, traditional assets after doing that, but you now got dollar for dollar return by putting $1 in, you get $1 return. So I would say at a minimum, yes, people should still be putting in the match to these programs before they go buy Bitcoin, because that's a sure return. And while Bitcoin we all think is a sure return, right? We don't know the time horizon on that. So like my view obviously is not that Bitcoin's going to go to zero. I don't think that people are taking so much risk when they put money into Bitcoin, but the price is going to fluctuate, and it's going to depend, like your returns are going to depend on when you got in and how long it takes to get to the price target that everybody thinks it's going to, in which case, in the meantime, right? Like it makes sense to diversify, to put a little bit here, get the tax deduction, get the match, and then also with additional savings that you have to then go and buy Bitcoin. So that's the advice that I would give, like those two groups of young people coming out. Do you have debt or not, and what you would do.
That's reasonable. I always take a more radical approach and say, screw the IRA, screw the 401k, just put all cold storage Bitcoin, because I don't necessarily, unless it was a collaborative multi-sig and I could hold the own keys for whatever the retirement account is, I don't necessarily trust that those assets won't get confiscated over the next 40 years. I'm just not sure how things will shake out as far as the government and authoritarianism. But
Yeah, I hear you. But I would say, like, on a Roth IRA, it does make sense, right? There's companies like Unchained Capital where the setup is kind of expensive, right? But once you set it up, it's a minimal annual fee. And you have collaborative custody. You do have your own keys. And the Roth IRA, if they don't seize it, right, in your situation or in your example that you gave, if they don't seize it, you now have tax-free money later on that you can pull out and not pay capital gains on. So I would say the Roth IRA is a great place to put Bitcoin. Traditional IRAs, I'm not as excited about, I have to be honest. There are a lot of rules about like what happens when you take that money out, and you are forced to take that money out now at the age of 73. And so for a lot of people who are your age, you're not really thinking about age 73. You're definitely saying that the government's not going to exist by the time you're 73, and maybe it will, maybe it won't. But if it does exist right now, if Bitcoin does moon by the time you're 73, you are taking required minimum distributions and paying pretty high taxes on that. In which case, I don't think it really is worth it. If that's the only place you have money, right, it's better to allocate to Bitcoin and have some Bitcoin and do a collaborative custody like setup in your IRA than it is to not own any Bitcoin at all because you don't have any money outside of it. But I would say if that's your situation, then you have to really reevaluate what we talked about at the beginning, which is spend less than you make. If you're putting money away in a retirement account and only putting away money in a retirement account, that's going to really limit your optionality. And so it is better to hold these things outside of a retirement account, I would say. And you're going to have more flexibility in your life in general if you're able to save outside of a retirement account, because you can actually use it before you're 59 and a half.
right, that's what I've always thought. In my mind, maybe I'm too ambitious, but I'm like, if I want access to my capital when I'm young, right? I want to take risks. I want to start businesses. If I'm totally reliant on this nest egg and I'm scared to touch it and I don't actually have quote unquote wealth until I'm 59 or 60, it's like, in my mind, I feel like I've kind of failed at that point. I want to be able to access all that and build it in other ways. But
I think you
I
can do
know,
both though. I know, like, I think that like when we're in the Bitcoin world, we're kind of all or nothing because we're like, oh, well, Bitcoin's so much better than fiat. So we just want to be 100% Bitcoin. And it's like, okay, that's great. But like, we can do both, we
right.
can live in the fiat world and have a little fiat and it's going to be okay. And we can also like do things with Bitcoin. And it's the same thing with financial planning. Like you can have a nest egg outside of retirement accounts and you can also have a nest egg in retirement accounts and you can benefit from both. And it doesn't, like, two things can be true. And I think that that's kind of hard for people to swallow because two things being true in general is hard for people.
Yeah, I definitely agree. And I would throw in that I guess if you wanted to take, for example, most of my portfolio is spot Bitcoin, but I also dabble a little in mining stocks, MicroStrategy in one of those retirement accounts. That'd be a good vehicle to do that, to avoid having to pay those taxes whenever I'm older and want to withdraw from that. How would you, let's say you've got someone out there, totally not me, who dollar cost average all the time, has zero idea what their cost basis is. What kind of advice would you give to that person when, maybe the bull market comes and they're looking to take some profits, obviously not sell their whole stash of Bitcoin, but if you have no idea and you haven't completely not thought about taxes at all, just kicking that problem down the line, where would you begin to sort of tackle that?
Yeah, so usually what happens is that people DCA, they do like a daily DCA. I've even seen, or the other thing is that if they're not doing the DC, like they're not doing, let's say they didn't set something up with Swan or River or something like that, but they've used multiple exchanges so to buy, in which case you've got to pull cost bases from all these different places. I wouldn't worry so much about specific lots. So there's this concept in traditional finance where you actually match specific lots up to sell. And so what you would want to do is like you literally, when you're going to do the sell order, you select which one you're going to sell and you sell it. Right now, in Bitcoin, what you can do basically would be to provide the cost basis to your accountant or to your TurboTax software, basically of what that highest lot cost basis was, to match that against what you did sell, rather than like at the time selecting, because that's not actually an option that is available to people. What happens though, right, is that people don't know even what that lot is to select. And so what I would say, it's very annoying and it's very time consuming, but it is something worth doing. If you're doing a daily buy, you probably need to be doing this weekly, is pulling your cost basis on a weekly basis and keeping it in a spreadsheet. I would say stop daily buying, actually. It's like one of the things. It's like, okay, do you need to buy daily or could you just buy weekly? Like, do you need to buy weekly or can you just do like, 15th and 30th, right? Like it, or pick like 8th and 28th. I don't know. It doesn't really matter, right? At the end of the day, it's like, if you're regularly buying, like, does it actually have to be daily or not? Like from an accounting perspective, right? The burden is so much heavier on you and you're not going to eke out that much better, I would say, from a price perspective by doing it daily. So that's something to consider. But if you're already there, right, what you do have to do is actually go in and download all of your files from all the different custodians that you've used, not custodians, sorry, of all the different exchanges that you've used to help you buy. And then you have to basically create a file of all of these things. A lot of them also, they typically don't show the price at which you bought, so it kind of depends. You might have to actually look at the value and then the amount of Bitcoin that you bought, and then calculate the price yourself. I would definitely recommend that people do that, and the reason why is that then you could very easily see which specific lot, if you're going to go do that sale of like, oh, I bought here that daily, like for a whole month, I bought it, 68K. Like I should really be, those should be the ones that I sell, right? Rather than the ones I all bought at 16K. So that way, like you can get a better idea, because sometimes we kind of get skewed with our cost basis if we just see the value. If for whatever reason you happen to buy more on a specific day than another day, right? You might just do a mental accounting thing and think that that's a higher cost basis, but it's actually not, because you got more Bitcoin for that value on that day, So I would say definitely like sort for price, and then be picking those lots against what you sold, to get the highest cost basis when you're filing for your taxes.
That makes a lot of sense. And I guess an hourly DCA would be 24 times worse than a daily DCA if someone was doing that.
Yeah. I mean, honestly, like I get where the community is coming from. Like the more you get in, right, it's a very volatile asset. You want to be able to get the best price all the time, but you're obviously doing much, much smaller amounts, and you're just creating a nightmare, I would say. If your cost basis is so out of control that like there are softwares out there, I know Bitcoiners don't like to use them because they're not private, right? You're giving over your information about how much Bitcoin you have and so forth in order to get cost basis information. But there are ones out there where they'll do it for you. And I would say in situations where you've just got so many lots that you can't keep track of them, then you're unfortunately going to have to go that route. And, unless you're like a software engineer and you can do it yourself type of thing, where you pull all the data and then you scrape it and you create your own, software basically. But for most people, for the average person, right, they're not able to do that, in which case they either need to stop making their cost basis so complicated or they need to use a service.
Right.
Yeah.
That makes sense. And I'm glad I did the hourly DCA thing for a little while just because I thought it was funny. I did like 69 cents an hour for a while. I was like making myself laugh, but I didn't keep that up for long, but that'll be a headache at some point. How do you
or not, you can just like say, I'm never going to sell those because that's annoying.
Yeah, exactly.
Yeah.
And then do what you said and take the chunks I bought at 60K. And if I'm going to sell anything, those will be the ones to sell. Makes perfect sense. I've had this conversation before with friends, and because I'm not a tax or accountant person, I was like, I wonder if you could actually do that and take those specific chunks. And I told my friend, like, yeah, you can do that, not knowing if that was actually true. So I'm glad you've verified that information for me.
Yeah, as of now, it's true. If the IRS comes out with more guidance and is requiring people to actually sell the specific lot that they purchased, then obviously that's going to become more complicated, because you're going to have to find it, and people do coin joins and other things. So I think it might be very difficult, in which case like the exchange itself is going to have to create functionality to help people do that.
Mm.
We're very far away from that right now. So as of now, you just pick the lot that you claim you sold, and that's it. Yeah.
Awesome. What about taxes for Bitcoin miners? Because that's also recurring, kind of like the DCA, but then there's that profit margin there. Is that taxable? And another question on the mining is the ASIC value, right? So there's kind of physical depreciation on the rigs. Do you have any insights into, how Bitcoin miners could take advantage of that from a tax perspective?
Yeah, so I'm going to preface this part of it with I'm not an accountant, and there are a lot of accountants out there that are much smarter than me who would be able to give you much more detail on what we're discussing. If you're doing Bitcoin mining, it's a business. And people don't like to hear that because they're like, no, I'm just like, heating my pool and for free because like I'm getting Bitcoin and I'm just using the electricity and then we're using the pool. And it's like, okay, that's great, but you're running a business, right? And so you have top line revenue, which is the mining reward that you get, right? And then you have you have all of your cost of actually doing that, which is the electricity, like any miners that you bought and so forth, like any racks you had to set up, so forth. I mean, I'm not a miner again, so I don't know all the ins and outs of what you would do, but there's construction involved and there's certainly depreciation. So there are different ways to depreciate. There's straight line and there's double declining balance. So in years, I would say like you have to pick which one you're going to do. You can't just switch back and forth. If you're starting mining in like when Bitcoin prices are really high, then it's really going to depend on what expenses are like when you got that, whether or not you choose double declining balance to take a bigger depreciation in the first year and less depreciation on years after that versus single line or straight line, excuse me, where you're taking the same amount of depreciation every single year. And so again, that's something that I'm not a super expert in, but would be something you would want to discuss with an accountant. But that's how you would handle depreciation. But basically, it's the revenue that you get, all the expenses, depreciation, and what's left over is actually what you pay taxes on.
Okay, that makes sense. And
And you would want to keep a cost basis too on the mining reward, which is
right.
because, right, if you don't sell that, right, and you keep it of what's left over, right, you're obviously going to sell some to pay expenses. I don't know anybody who's like just funding their whole operation with their fiat. I mean, some people are probably doing that, maybe keeping 100% of the Bitcoin, in which case it's still a business, right? Like even if you're not selling the Bitcoin, you still need to be tracking your cost basis, right? And then doing the expenses. You're doing everything in dollars. So when you get that mining reward, right, you'll look and see, oh, what was the price when I got that mining reward? And you just sort of mark that. And it's not going to be exact, but that's okay, right? Like at the end of the day, if it's nearly right, then it's good enough.
Yeah. And so that's the cost basis of the actual Bitcoin, not necessarily, your cost of production from
Yes.
electricity. Okay.
Yeah, and so you want that, right, because of what we were talking about before, which is that you might need to sell your Bitcoin in the future. In which case, you want to know whether or not you have capital gains or capital loss, right? Because you could deduct the loss on your taxes as well.
Yeah. Actually, the kind of situation you described too, where people are funding their whole operation basically out of pocket, that's not actually super uncommon from what I understand. Like if you only have, 4 or 5 ASICs and you want to just accumulate as much Bitcoin as you can, use your free cash flows, your income from your job or whatever, pay the fiat bill out of pocket, and then keep all the Bitcoin, not have to sell anything to worry about the tax implications. That's personally what I do because I don't have like a super large fleet of ASICs, but I have a few
Yeah.
with Blockware, and so I just pay out of pocket and keep all the Bitcoin. And then the other situation you described, someone heating their house with their pool, I think there's a lot of interesting implications there because most of those people, I imagine they're not mining at a profit. It's all loss, I would assume, especially if they're using like an S9 or something. So there's a
Mhm.
lot of potential to write off losses there, I would imagine.
Yeah, I would assume so. And like you are getting benefit from it, right? It's not as costly, let's say, as just buying a pool heater and you use the nat gas and you have to pay every time you use it. Whereas, there is the promise of maybe, depending on your miner, you might never get a black reward, but you might.
Yeah.
But in the meantime, while you're waiting, your hot tub is heated or your garage or whatever it is, wherever you put it.
Yeah, 100%. And I guess with pools like Oceans too, so they can connect to that and get those non-custodial rewards and not try to have to luck out on a block. But some people love to do that. They love to solo mine and just play the lottery and try to nail a big block. I wouldn't personally do that though. I like the consistency of the mining rewards. What would you say to the Dave Ramseys of the world that are just so far down the fiat rabbit hole and they're not putting their clients in Bitcoin at all, I kind of view that almost as like negligence, right? That I view that in the same lens as a doctor that just puts their clients on pills and doesn't tell them to like change their lifestyle, be active, eat right. Would you view it through the same lens? And then how would you go about, trying to orange pill someone who's indoctrinated into the Dave Ramsey philosophy?
Yeah, so I would say, unfortunately, that while I think that it's not the right thing to do, right? Obviously, because otherwise I wouldn't be advising clients on Bitcoin. It's still a relatively new technology, and most of these advisors, I think, if we provide some context as to why they're against it, it kind of makes sense. Not that, like, context doesn't forgive bad behavior, right? But it does provide some reasons why we are where we are and why the financial community is kind of hesitant to dip their toe in. So for the most part, right, like, advisors don't want to be associated with things that are scams or bubbles, right? Or and if you look at the past, right, like the dot-com bubble, I think is a perfect example of that, right? There were plenty of advisors that were helping their clients get into these tech stocks, right? And they got, like, the poor little guy involved at the end, and then the guy went broke. And so I think when advisors look back at that, right, they have this fiat mindset as it is. Like, we're all taught from the beginning as financial advisors and planners that the thing that we need to do most is to protect clients against inflation, right? And so, like, they need us to help them get quickly invested so that their dollar doesn't lose purchasing power. And so that aligns perfectly with Bitcoin, obviously. But if you don't think that Bitcoin is the solution to this problem, right? If you think that this problem is just something that is always going to exist because you learned in a textbook that in order for economies to grow, right, we need inflation. And so changing what the monetary system isn't a solution to a lot of people right now. The solution is through investment. And so in order to protect their clients, they want to make sure that they don't invest their clients in things that are highly volatile and that potentially could go to zero, right? Where they, buy tulips, quote unquote, for their clients. And then the next thing you know, like, the bulbs are worthless, right? So I think if we provide that sort of context, then yes, it makes sense why advisors are not, actively allocating clients to Bitcoin. That, and, while I have, like, what we talked about earlier with the SEC, while my position is that the SEC has given enough guidance where somebody like me can go and advise on Bitcoin, I think the opposite is true for a lot of advisors. They haven't given enough guidance to these compliance departments to outright say, hey, you can help clients with Bitcoin, right? And so because they haven't done that, a lot of compliance departments have been very hesitant, especially at the larger firms. So a firm like mine that's really small and nimble and has been around, I can make those decisions because I'm the head of compliance, right? But if I had a compliance department telling me that I can't do that, right, then my hands are tied and I either need to go start my own firm, which is difficult for a lot of advisors to do, or I just have to listen to what they say because otherwise I'll be fired. And so there's that situation going on as well. And then there are just advisors who are going to be outright against it. And so I think it's going to be a bell curve, really. There's always going to be that, that end of the bell curve that's going to be against it no matter what the price is, right? And then eventually they'll come around, in 50, 60 years or whatever, like, their grandchildren will be the ones that, advise people on it. But there's going to be that middle tier of advisors that it's just going to take time, right? And there's always going to be those people on the other side who are at the forefront of it and who are leading the charge on it. And so I think that's just to be expected, and that people have unrealistic expectations of how quickly advisors can move on something like this, especially if they don't understand it. And yes, they've been given time, but I don't think that they've been given as much time as people can appreciate that they need. They need a little more evidence that this is going to stay around. And I think that Bitcoin is providing that, right? The more that Bitcoin goes through these cycles and the longer that Bitcoin is around, then the more advisors that are going to get involved. There were no advisors involved in 2016 when I started advising on it, like, literally none. There's a group of 8 of us now that we're the Bitcoin Financial Advisors Network. You can go look us up. 8 is a lot more.
Yeah.
It's been 6 years, but 8 is a lot more than 0 or 1. And I'm sure that there's not just 8 of us, right? There's 8 of us on that website because that's all we know about. There are more people who are involved and who are doing this who aren't on that website and who will be in the future. And so, I expect that number to grow exponentially, especially after the halving, if there is a run up, right? And like you were saying earlier, like, NGU technology works to get people excited and involved. And I would say that bear markets do that too, because when it doesn't go away and it doesn't go to zero, then people kind of goes off and they say, oh, this is really here to stay. Like I've seen this now come and go, quote unquote, but it really hasn't gone anywhere. And that gets advisors involved. And especially if there is an ETF, then there's an actual vehicle for advisors to be putting their clients in. That's not just like ragtag multi-sig setups like we're doing. And so like all of those, I think are going to contribute to advisors going more towards the future for sure. But it is taking time. And I think like we need to give them a little bit of grace, but also, like they need a little fire too under their butts to get going as well. So a little bit of both, right? Like a give and a go. The last part of your question though was, sorry, I already forgot it.
Oh, no, that's okay. I mean, there's a lot to unpack there, and it was really well said. Bitcoin, one, it simply wins by not dying, right? This thing can't be killed. It's going to exist forever. And the longer it sticks around, people are like, wow, the government didn't actually kill that thing off yet. It's like, maybe it's because they can't. That light bulb starts to go off. And then another key point you hit on there, which is one of my favorite things about Bitcoin, it's so grassroots. The least friction sort of entities adopt it first, right? So individuals who, I'm my own decision maker, I manage my personal balance sheet, so I can adopt Bitcoin 100% ASAP. But then like slow moving entities like a JP Morgan or the United States government, they're going to be the last ones to adopt Bitcoin because there's so much friction to make those decisions. And so it really just builds from the ground up. And we've had 15 years to front run the institutions, and maybe we'll get a little bit more, but with the ETFs, who knows, right? They might start piling in.
Yeah, for sure. And I think if people are looking at it as an investment rather than savings, which a lot of people are, then it's a very different picture than if you're just saying, okay, like I'm going to save some things in dollars because I use dollars on a regular basis, but I also want to have savings in Bitcoin because that's long-term savings. And that's something that I'm going to use in the future. Where like I believe in the future that we're just going to be able to outright use it, and there's going to be a de minimis amount where we won't even have to pay taxes, but you'll be able to go buy dinner with Bitcoin, and you'll be able to go buy a couch with Bitcoin, and it won't be a big deal, and you won't have to report on it. But like in lieu of that, right, we're still in this weird place where we need to have both this short-term savings and this long-term savings, right? And so I think if people start viewing it more as savings rather than an investment, it changes the whole financial picture, because then you're thinking, okay, how much savings do I want to have versus how much do I actually want to have allocated to risk investments? Right now, we're all forced to buy risk investments, or not really, right? Because there's Bitcoin, but like the way that we were viewing it prior to Bitcoin is that we're all forced to go beyond our risk tolerance because we have to beat inflation. There's no way out. You can't just hold cash in a mattress the way you maybe could 100 years ago and expect there to be staying power. And so at a minimum, right, like the government is targeting 2% inflation, in which case you have to do something. And so for most people, like they're using the S&P 500 basically as a savings account, right? And it's totally inappropriate because you can't use a company, a bunch of businesses as a savings account, right? You need actual savings. And actual savings is what's going to help you in situations like, in 2020 with the whole COVID scare, right? There was a complete removal of liquidity from the system. And it's because people are living paycheck to paycheck, and they're putting their savings into S&P 500 because they don't have anywhere else to put it. And so then people have to sell the S&P 500 to go put food on their table. It doesn't make any sense, right? Like people need to have cash around. And governments around the world have undervalued savings, I would say, and that's making a comeback.
That was really well said. Bitcoin makes savings great again. And I had this conversation with a friend the other day. It's kind of like this is why I don't diversify my Bitcoin, because you don't diversify your savings. You don't hold some of your savings in dollars and some in euro and some in yen. Maybe you do if you live in Europe, and it's different in America. But
Yeah.
like I don't need to save in dollars necessarily, at least for my long-term stash. It's just all Bitcoin, and there's no counterparty risk. There's no anybody that can come in and change the protocol and dilute the supply. There's no scumbag CEO who can do something to tank the company's stock. Like there's none of that. It's just pure savings that we've never really had before in humanity's history.
Yeah, for sure. And like you pointed out, like there are going to be very limited reasons why somebody would have multiple currencies as savings, right? Like I could think of, an international businessman who is traveling quite a bit and who doesn't want to be bothered going to like the currency exchange, right? He just wants to have like his, his French bank account and his Japanese bank account and his German bank account, and whatever, and he's going all around doing whatever he needs to do, and then he comes back to America and he's got his dollar account, right? There's like 0.0001% of the population that's doing things like that, who actually needs to have all these savings accounts of different currencies. And so I would say the same thing is going on in crypto, right? There's going to be 0.0001% of the population that actually needs, for whatever reason, to have, this utility token. What I've seen is that nearly nobody needs to actually have that, right? And so it's like, there are certain apps on your phone that you use all the time, and there are other apps that you keep on there, but you're not, like, you never use them, and you should probably just delete them. And for most people, it's going to be what having a crypto stack is going to be as well. Like, you just need one, and there is no second best.
Amen. My last question, what are your expectations for 2024 and 2025 in terms of Bitcoin, both price and adoption in the media? How are they going to perceive it? Are we going to see these continued attacks by people like Elizabeth Warren? Is crypto going to make a resurgent? Is there going to be another altcoin bull run, FTX type of situation? What are your overall expectations for the next couple of years?
Yeah, so my expectations are the same that they've always been regarding price. I really don't know. I mean, I wish I had like a crystal ball on these things. I try not to actually have any kind of price expectation because, right, again, like, it's long-term savings. And so in the future, it'll be worth more than it is today. And obviously the price is really exciting for people. And so, like, if I were to say it's going to go to 1 million, people are going to, be really excited about that. But I really don't know.
Make for a great thumbnail title.
Yeah. And Morgan said it's going to 1 million. I really don't know. But I do know that if you hold it for a long period of time, if you're willing to hold this for 30 plus years, you're going to be just fine. That I know for sure. And so that's what I would recommend to people, is that if you're going in as like the price is going up, people generally expect the price to go up during the halving or 18 months after the halving, just because there's less supply on the market. It makes sense from supply and demand dynamics. But also what we've seen is that the circulation of coins sort of evens out after a while. And so it kind of goes back to that same supply once people adjust, in which case, it's less about supply and demand, right? And more about just like, well, it is about supply and demand, but it's less about the halving and more about more people are now interested in this because there was a wave of adoption. And so that's what I expect to see. I do expect to see a wave of adoption happen in the near future. And that is going to cause the price to go up for sure. And I guess, like, from that perspective, though, price does help get people involved. And so that's a good thing, right? There are going to be more people who are interested in this. There are going to be more people who are building things in this space. That does come, though, with more people being interested in figuring out ways to, part people with their money in other ways. I've seen this since I've been involved in 2013. There's always a new altcoin. There's always a new scam to buy. There's always somebody who's got some glittery thing that they are claiming is going to change the world, and it never does. It always fizzles out, and it's a distraction. And these people who are, maybe they're either very smart and they're wasting their time on this when they should be working on Bitcoin, or they're not so smart to realize that they should be working on Bitcoin instead. And either way, it's a bad situation, right? Because people do end up losing money in these things. And I know the Bitcoin community gets a lot of flack for constantly saying that everything are scams. But we're doing that because we want to protect investors, right? I mean, that's like at the bottom line of it, is not that we're trying to, make fun of other people for what they're doing, or, I mean, some people are, but like, we're not trying to go out there and say all these bad things about other currencies. We're just literally trying to tell people that Bitcoin is it. And you can't make it better than Bitcoin. And if you can, then Bitcoin will adopt it, right? If there's a feature that really everybody out there wants, then Bitcoin is going to work on that. And if the trade-off is there where it won't sacrifice the security and stability of the network to add that, then they will. And if it will sacrifice stability and security of the network, then it's not something that we want to add, right? In which case, the other coin that's being created is going to have that stability and security problem. And I think that people are not thinking about these things clearly, because they're so, excited about price, and, greed does come into play with these kinds of things. And we are going to see it, I think, again and again and again throughout many cycles in the future.
That was articulated very well. A lot of Bitcoin maxis would just say, no, it's a shitcoin, it's a scam, not dive any deeper. But I appreciate you laying it out there in a civilized manner, right? Anything that's necessary for a blockchain, it's inevitably going to be done on the most secure, most decentralized blockchain, which is Bitcoin.
Yeah, I totally agree. And if it's not going to be something that's secure or something that people actually want to use, then it's not going to end up there. And so I think people just need to accept that, but it's hard, right? Because people want to, have ownership on their own projects, and they want to get wealthy over certain things, and they think that there are problems with Bitcoin because it's not exactly what they would do, and it's like, okay, well, if you could have done it better, then you would have been Satoshi 15 years ago.
Yeah. My last question for you, I ask this to pretty much all my guests. What does Bitcoin mean to you?
Yeah, so I think now as a mom, I have 3 kids. Bitcoin to me gives me hope. I, especially being a financial planner for so long, it is hard to get ahead. People do the right thing, right? They make money. We tell people all the time to save 20% or more of their pre-tax income. That's like sort of a rule of thumb minimum that people should be doing. And people who are doing that in fiat work very, very hard to control expenses, save 20% of their pre-tax income, invest that slowly over time. And they grind away basically their whole lives so that they can retire at 65 or 70. Like that's the picture prior to Bitcoin. And that's just not a future. Like that's something I'm willing to do. I'm willing to sacrifice everything and anything for my children, right? I'm willing to work till I'm 90 if I have to make sure my kids have like the life I want them to have. Within reason, obviously, because then they'll get spoiled. But like,
Yeah.
but like, I think though, it gives me hope though that my kids won't be doing that, right? That my kids maybe will be able to focus on things that are important to them and where they can actually make the world a better place, right? That's why we're here. And we can argue about whether or not there's a higher power. I believe that there's a God, that there's a creator, and that He put us on Earth for a reason. And we are supposed to make the best of this life and make the world a better place. And the way that we do that is that people like me who push around financial papers, like that's not, yes, it's a meaningful life because of how I figured out how to do it, but it's not a meaningful life when you're just trading stocks and providing liquidity, right? Like, and that's what I did 15 years ago, right? It's not a meaningful life, and it's not something that helps, further the betterment of humanity. But it is something that's close to the fiat financial center so people can make money doing that. And so my hope for my children in this Bitcoin future is that they can not only help humanity, but do it in a way that is meaningful and matters to them while they still have, their livelihood.
Yes, Bitcoin, I would definitely agree, is much more meaningful than the fiat system or honestly any other industry at this moment in time, right? Way down the line, it'll just be money. People won't even think about it. It'll just be another aspect of our lives. But at this point in time, right, we're truly changing the world for the better if we can bring about Bitcoin as the new monetary system. And most people don't even realize that yet, which is exactly why I want to work in Bitcoin, to really change the world and work on something that's bigger than ourselves. Because long after we're gone from this earth, Bitcoin will still be here, pumping out blocks every 10 minutes and providing a peer-to-peer payment network and savings technology. So I really appreciate you taking the time to do this, Morgan. Where can we send the audience to keep up with what you're doing and learn more about you?
Yeah, thanks. It was really fun to be here. So thanks for having me on, Mitch. You can find me on Twitter. I'm at Morgan with an E Rochard. My financial planning practice is originwa.com. I do Bitcoin consulting through my other company, Money Owners. So if you're just looking for some hourly chatting about like your multi-sig setup or other Bitcoin questions, you can find me there. I'm working on a book right now. It's the Bitcoin Personal Finance book. I don't know when it's going to be out. I was kind of hoping it'd be out by now, but it's slower going than I had hoped. But in the meantime, if you want to check out my other book, it's more fiat financial planning, but you can apply it to Bitcoin. That's the Personal Finance Quick Start Guide. You can find that on Amazon. And yeah, thanks for having me.
Yeah, thank you. All the links for that will be in the description. Thank you for watching, everybody.